Tom White joining me now. We have a big day, Tom White, getting ready. Let's look at Disney. You're looking at that. I mean, I know we think about Moana and Mufasa. Those were some bright spots. Tell me a little bit about the Disney story. Good morning, Tom.
Good morning, Nicole. Yeah, beat on EPS, a slight beat on revenue for the quarter. I think some of the expectations that the company laid out in November is the reason that we're seeing the stock up modestly here post this report. You mentioned some of the film business. They had the top three films of last year, Mufasa, Moana 2, lending some support there, the latter creating over $1 billion at the box office. So that was a bright spot. Now, during that November meeting, an analyst call, that mid-quarter update, they basically stated that what they're going to see as far as subscribers to Disney Plus was going to fall about 1.4 million subscribers. Well, that came in down 700,000. So a little bit lighter than expected there. Third straight quarter of profitability for the streaming part of their business. So that's a positive for Disney moving forward. They had total Disney Plus subscribers stand at about 124.6 million, and that was down 700,000 from the fourth quarter in 2023. Total Hulu subscribers did grow about 3% during the period, up to just above 35 or 53.5 million subscribers there. And average revenue per subscriber increased 4% to about $7.99, and that's due to some of the price increases that they saw. Now, as far as their parks business goes, they did see a little bit of a pullback. They stated in that November release that they were going to see a pullback due to the hurricane season. So that negatively impacted them, but maybe not as much as the street had anticipated at this point. You got to remember, Nicole, this is one of those stocks that if you invested in this stock 10 years ago, the stock's relatively flat over that period minus potential dividends. So yeah, it's been, that type of trade for this company. Now, 2026 is when Bob Iger is supposed to step down. They didn't really give clarity. We'll have to wait and see if anything comes out of the conference call as far as that management mix-up here when he leaves the company once again. But expectations pretty elevated there on that side of the business. They did have some impairments for the cruise business. They had some new boat launches, so that took a little bit of a hit off of their top and bottom lines also. But overall, a pretty decent quarter. I'm thinking more of along the lines of this is more of a relief than maybe a spark to the upside in any big rally from this level.
I think you made a great point when you talk about a 10-year chart. I mean, there was one summer that Disney just was unstoppable. New highs. And it was so exciting. But if you look over 10 years and really you got mostly dividends, that's pretty frustrating considering when you do the comparison to many of the tech stocks. So very interesting there. And of course, people still, they still want their Netflix and they still want their Disney. Those still seem to be sticky and sticking around, that's for sure. So good news on revenue, net income, streaming profits. Thank you for that. And then next up, we talk about Uber. What stood out to you about the Uber story?
Well, it seemed like it was a pretty decent quarter. They had that $3.21 EPS that severely beat last year's 66-cent EPS number, but that was due to about a $6 billion incremental tax benefit there, another $550 million on that added on to that also. That was a pre-tax benefit, the $6.4 billion benefit from tax valuation release. So that's why you're seeing that outsized EPS number. Revenue came in a little bit stronger than expected, $11.96 billion. That's up 20% from year-ago levels. Now, this seemed like a pretty good quarter, Nicole. The stock was off about 20% from the all-time highs that we had in Uber just about 4 months ago. But there's been a lot of concern about the robo-taxi and the impact that's going to have moving forward. We always thought, like, once Uber got rid of their drivers, it's going to increase their margins. That's going to be a real big bonus for their business. But now that Tesla's taken the lead and Waymo is out there as far as the autonomous vehicles getting driven around, what impact is that going to have to Uber moving forward? Because are they going to have to pay for licensing fees? They're not going to own the cars, or do they have to buy the cars that have this technology built in. So that's been, I think, a little bit of consternation here for investors at this point. But let's run through some of the numbers here. As mentioned, revenue was up 20%, net income of $6.9 billion, and that includes those pre-benefit charges there. $44.2 billion in gross booking for the period. That was above the $43.5 billion that the street anticipated. And if you look at for the first quarter, Uber expects gross bookings to be between about $42 billion to $43.5 billion. That's at the estimates for that. We're at the high end of that range that Uber gave. But if you looked at the performance across the board, gross bookings were up 18%. This was a pretty good quarter. I might, tend to think that we're probably going to see a bottoming in this stock. I know the stock's down this morning on the back of this report. But if you look at some of the growth numbers, pretty solid. There were some investments that they made in there, so operating income dropped a little bit also. So that was a headwind and maybe creating some of the weakness that we're seeing in the stock. But overall, a pretty good report here, Nicole. I just think a lot of the expectations moving forward are clouded right now due to potential robo-taxi impact, among other things.
Yeah, you always felt like there was a juggle with Uber, and you didn't know which one was better. With Uber, because they had multiple things happening, right? They had rides, they had food. Now you're looking at robo-taxi versus a more pure play, which would have been Lyft with just rides. And it always seemed that Uber was the better player because of the multiple revenue streams. But if you looked at a one-year chart, which I just did, Lyft is the better performer over 1 year, up 9% to Uber's 4% roughly. But Uber seems like it has so much more in the world of prospects and growth going forward because of what it has laid the groundwork for. Anything else in today's session that really stands out to you we're getting ready for the opening bell?
Well, I think it's going to be another choppy session, Nicole, and maybe it should be at this point. If you look at, pre-market movers here as far as futures goes, we're seeing some weakness in tech. 6 of the 7 Mag 7 names are in negative territory based on the back of Google Alphabet earnings. AMD weaker also. So we're seeing some weakness in big tech. It's not going to lead today. Russell 2000 outperforming a little bit, but that's probably on the back of a weaker dollar and weaker yields, as you mentioned at the top of the show. So that's lending some support to the small caps. I think one of the keys today, Nicole, is can tech right the ship? And will it not drag down the overall market today? Then you've got headline tariff risk. We'll hear some more commentary, I'm sure, on a hour-by-hour basis there. That might lend some more volatility to the overall market. But if we don't see a full rotation out of equities today on this tech weakness, that's going to be a benefit for the overall market here today. Now, if we start to see some weakness in small caps, everything else starts to fall due to the fact that most of the Mag 7 and a lot of the big tech names are in the negative at this point, that might, capitulate and kind of create that snowball effect for the overall equity market. But had nice gains yesterday, Nicole. We're reversing some of those today. I just think big tech needs to right the ship if we're going to see any possibility of positive territory for the equity market today.
Yeah, I also thought it was interesting. You mentioned the dollar. I mean, the yields, I think, is a big story. Bank of England talked about more cuts coming, so we're always focusing on what goes on with Europe. And then, I think about the Google story, down 7%. Do people start nibbling at some point? They've been buying the dips for so long. And I was saying Ahmed Khan, who had a 237 price target, he was out talking about that this morning. You had yesterday Dan Ives talking about $40 to $50 upside potential. Maybe as he reads through this, maybe he'll rejigger that, but for the most part, there still seems like there's a confidence. And the last thing I'll note, very interesting that you mentioned in the Uber story, I was seeing about that they face headwinds with currencies. If we have our dollar pull back a little bit, that might help, the likes of Uber and some of the other multinationals. Tom White, wonderful to see you on this Wednesday morning. We're ready for a big day.